Good morning, everybody. It's Friday, December 16th, 5:30 a.m. Central Time as I speak here. March corn futures down 1 3/4 at 651 3/4. January soybeans down 5.5 at 1468. March Chicago wheat down 1/4 cent at 757. March Kansas City wheat down 2 1/4 at 858 1/4. March spring wheat down 2.5 at 916 1/4. Before we start and get into the news this morning, I've got some statistics for you, and then I've got kind of an announcement for you, I guess. So I started doing this podcast, guys, at the early part of 2020. I started doing the podcast. YouTube was a little bit later. Since the early part of 2020, I've done this entirely on my own. I've done a grand total of 851 podcast episodes, 620 YouTube videos, 800 ballpark premium videos. I don't know how many TV and radio appearances I've done, but I have not taken a vacation in years. And because of that, I have got some new contributors for the channel. These are my friends, Brian Splitt and Matt Bennett. You guys don't need an introduction, but I'll introduce you anyways. These guys are from agmarket.net, and they are my new contributors here for the YouTube channel, for the podcast, also for the premium stuff. Good morning, gentlemen.
Morning, Joe.
Good morning, Joe.
Happy to have you here.
We are very happy to be here.
Happy to be here.
So from time to time, Joe, myself, I'm gonna be like try to take a few days off here and there, maybe take a vacation this year. And when I'm not here, these guys are gonna take over for me. And I think we're gonna do like a weekly YouTube video podcast episode. You guys are going to help me out with a bunch of the premium stuff. So I think this is going to be a really nice deal. This is going to be a really great value add for you guys watching on YouTube or listening on the podcast, or if you're a premium subscriber. Tons of knowledge, experience, information from these guys.
Looking forward to it.
Welcome aboard,
like
boys.
your
I know it's
family
early
to
in
take
the
a
morning.
vacation, Joe.
Yeah, no, I'm gonna do that. Okay, so like we always do, guys, we're gonna do the news, and you're gonna help me out with it. All right. Here's the first story today. Oh, that's the last story today. Hang on. Let me run through my slides. I'm all confused. Okay, Goldman Sachs says commodities will gain 43% in 2023 as supply shortages bite. They say that the Goldman index, it's now the S&P Goldman index or whatever. They say it's going to be up 43% next year. This was a quote from some Goldman analysts in a report. Despite a near doubling year on year of many commodity prices by May of 2022, CapEx across the entire commodity complex disappointed. This is the single most important revelation of 2022. Even the extraordinarily high prices seen earlier this year cannot create sufficient capital inflows and hence supply response to solve long-term shortages. That's a mouthful. What do you think about this?
I think anecdotally, a lot of the stuff that Goldman says publicly is faded internally. Whether it's stock market calls or commodity calls, but there's a lot of reason for some certain commodities to go up due to supply issues. But I think demand is going to be something that we continue to look at moving forward.
I agree. And I think the one thing they kind of left out, if you read that little snippet, you don't see anything about ag commodities. So, I think it's just something of note, talking about energies, metals. But I'm with Brian. I guess I'm maybe not super excited about it just yet. I don't think I'm going to go out and buy it based on this bit of information.
Yeah, it's just a prediction. And when Goldman talks, people listen. I mean, there's no doubt about that. In 2022, the Goldman index is already up year to date. We're up 23% as of yesterday. Here's your year to date returns in the grains. Corn's up 59 cents per bushel. Beans are up $1.38. Wheat is actually down. SRW wheat's down 14 cents a bushel as of this morning. So I don't know. I mean, predicting markets is pretty tricky stuff. And it seems like the interest in the long side of commodities has just really faded the last 6 months to a year. All right, let's keep going. We got some escalation in Russia, Ukraine this morning. So Reuters reporting that Russia fired dozens of missiles at Ukrainian infrastructure overnight, power shutdowns, there's freezing temperatures, some civilians killed. Guys, why don't the markets care about this anymore?
Well, I think number one, the market's a little numb to this, but number two, we are in a war, and there's going to continue to be infrastructure damage. But unless there is specific damage that suggests that their export capabilities are going to be drawn down, I don't know if the market's going to really react aggressively to that.
And I think every time we've seen the market act aggressively to it, there's been a lot of people that's gotten clipped by it. So, I think people are just going to be a little more hesitant than what they were just to buy in every time you see a bomb fly. But I'm with you, Joe. It's a little bit perplexing at times, but at the same time, I guess a lot of these folks have just decided they're not going to bite on it.
So the big funds, I mean, a lot of managed money is short wheat. Anybody who had tried to buy wheat got beat up pretty badly here, the second half of the year. So I think they're just a little skittish. You probably need to see some. I mean, you need to see something that actually disrupts exports, and this isn't it. I mean, they've got a grain deal. Russia's shipping wheat. I mean, until that changes, I guess. I suppose the market's going to be a little wiser about this, perhaps, maybe moving forward.
Seems like Russia's having their cake and eating it too in this particular situation to me.
It does seem like that. Export sales were actually good last week for a change of pace. Almost 3 million metric tons of beans. China was the largest buyer, almost 1 million metric tons of corn. Wheat sales actually weren't too bad either. Is this a trend, or is this just a 1 week blip on the radar?
It needs to become a trend in corn with our sales the way they are. We need to start getting some sales on the books in order to have a good shipment season, on upcoming in spring. Otherwise, we're going to look at further reductions on corn for export on the balance sheet. As far as soybeans, my opinion is that these are short-term sales to get them to the South American new crop. And once that Brazilian crop is online, our export program for soybeans is gonna drop off dramatically. And like you mentioned, wheat is down on the year, and we're getting to the point where we're a little bit more competitive with other world suppliers. So we should start seeing a little bit better export sales for wheat.
I can't argue with any of that. I think whenever it comes to corn, I'm with Brian. I mean, we've got to get this thing moving. I think we've got a good window between really into the calendar year, maybe, and I don't know, when the spring crop comes online. We should be the main player on the world export market, but how much of that's going to move is anyone's guess.
Follow-up question regarding exports. Here's a statistic, two statistics. Chinese purchases of U.S. corn are down 70% versus the same period last year. Chinese purchases of U.S. beans are actually up 3 or 4%. Why aren't they interested in corn?
Well, before COVID and before African swine fever, they didn't buy that much corn. It was maybe 1.5 to 2 million tons a year. So to expect them to continue at the clip that they've been buying corn in the last couple of years, I don't know that expectation is realistic, and it's going to be larger than it was previous to the African swine fever because of the way they changed their feed rations. I just don't know if it's going to be the same type of levels that we've seen in the second half of 2020 and throughout 2021. So it's probably somewhere in between would be my guess.
And that might be the case. The thing about it, Joe, I've got to think the Chinese are going to be stepping in buying corn. It's probably not going to be something that they're going to give everyone a big heads up on by any means, but the bottom line is that they're using more corn than what they're raising. So that's been a trend that's been going on for 5 or 6 years here. And I don't think they're going to want to dwindle their stocks too much. So they may not buy what they did last year, but I think they're going to be in buying corn over the next 3, 4, 5 months.
Yeah, it is kind of interesting. It's a fluid situation because, like Brian said, I mean, this was something that started, the big Chinese purchase of U.S. corn. It started like right after COVID, like mid 2020 is when it started, and it continued for a couple of years, and now it's backed off. So I guess wait and see type deal. We had a crush report yesterday, a little bit softer than expected. This is still not a bad number though. 179.2 million bushels from NOPA. Do you guys have any concern about domestic soybean crush given this number, which was a little bit lighter than expected?
As long as crush margins are at levels that they're at currently, it's hard to expect crush to back off significantly. So I think you got to watch board crush for indications there.
The same thing. I mean, when you're making money doing something, you're not going to back off of it too much. So crush margins are such that I don't really think you'll see much more softening in any way, shape, or form.
Yeah, I mean, you read this and you read the headlines and crush missed, but I mean, you're talking 2 million bushels, and they could just as easily make this up next month or the month after. So I don't see this as being a big deal. This is really close to like the numbers we saw in each of the last 2 years for the same month. So I don't see this as being a big problem. Okay, maybe here is a problem. Argentina still has a lot of problems when it comes to soybeans, planting delays, drought. The Grain Exchange says almost 51% of the soybean crop was planted through Wednesday. That's 14% behind the same period last year. So I think we're in a South American weather market as it relates to both Brazil and Argentina. We're kind of walking this tightrope where like Brazil's in pretty good shape, generally speaking. They got a lot of rain in the forecast. Argentina has some problems here. What's your take on the South American deal?
I think South America as a whole, you lose production in Argentina, and maybe it's 20 to 30% possible. But if the Brazilian crop is realized to the extent that the market thinks it could be right now, somewhere in that 152, 155 million tons, we're still going to have an overall record production between the two. So I think that's significant. And again, because Argentina is a big meal exporter, I think it just continues to put a lot of pressure on the meal market.
Absolutely. I mean, the sheer volume of acres in Brazil is just going to dwarf any situation as far as Argentina is concerned with losing bushels. But bottom line is, this is a meal story as much as what it is anything. So I think moving forward, you watch the meal market, see how it reacts. And I think the bean market won't be too far behind.
They do have some rain in the forecast. This is the Euro model, what's expected through Christmas. And these are your big soybean growing areas in Argentina. So they're going to see a little bit of relief. I don't know if it's too little too late. I don't know if these planting delays are going to hurt. If this rain is enough to help, and if the delays have already reduced potential. I mean, I think potential is already reduced, right? I mean, drastically.
It's pretty early. I think you're talking June timeframe for most of these areas compared to what we would be looking at. So, I think the bean crop, if you catch some rain, you're still going to be able to salvage a pretty decent crop. But at the same time, I mean, some of the pictures you see, and I never really trust those too much, but, it definitely indicates that it's been harsh enough drought that you're seeing some areas where it's beyond the point of no return. So,
yeah, just about all the groups out there. I mean, USDA hasn't made a big cut yet, but the private groups and the exchanges down there are talking, drastically smaller production. We got some recession talk this week. We had some bad economic data yesterday. Retail sales were out. They declined by 0.6 of a percentage point versus October. That was the biggest monthly decline of the year in retail sales. So a lot of the data indicating that consumers are cutting back on everything from home projects to Christmas presents. This is a quote from one analyst that was in the Wall Street Journal this morning. Most households are acting strategically, planning for a road ahead that may be more difficult to traverse with higher interest rates, the housing slump, and ongoing inflation, and the very real possibility of a recession. Are we in a recession right now? I don't know. Maybe.
It's weird. I mean, you go out to eat, you look at the airport and hotels, and it's like everybody's still spending money. But I look at the stock market, and recently the stock market just this week took out what I would consider some major support. The S&P has an extremely similar structure right now to what we saw in 2008 before it really rolled over hard. And I had sent a note out actually to internally to the group and to clients that I thought it would behoove them to put positions on to kind of hedge their equity portfolio, whether it's retirement or whatever they have. So I do think that we're in store for some lower lows in the stock market in the early part of 2023.
We'll see what happens, Joe, but everyone else is pulling back according to what you said, and we're actually adding on to our house. So I don't know. It's going to be an interesting I mean, we've been planning on this thing forever, but it's interesting in that, it's hard to get contractors still. So, I mean, there's still a lot going on out there.
Labor's super tight. I mean, that's one of the things.
Tight. Yeah. Money's a little tighter, but it just kind of depends. You hear certain folks out there loaning money out at 6%, 7%, 8%. And then the bank we talked to, they're talking 5%. So it's still some cheap money out there.
I mean, how do you have a recession with 3.5%, 4% unemployment? I mean, it's like that's never happened before, but I guess it could happen. I mean, the Fed is what's driving all of this. So I don't really know. Cattle market was a little bit lower yesterday. There was some cash cattle in the South at 155, which was, I think, a little bit better than last week. Any big, bold predictions on the cattle market, guys?
It still looks like a fundamentally bullish market as long as demand is there. The way the market's been trading, it's definitely, if you are friendly cattle, it seems to be paying to initiate positions on the long side on breaks instead of trying to add into strength. That's what the market's been doing. It'll make a new high by a few points, and then it backs off. And that's the time that you seem to want to buy that instead of trying to buy new highs.
Yeah.
Absolutely. Fundamentally, it's a big story. I mean, the bottom line, though, is the equities market's going to be able to hold together. Are people going to still be wanting to spend $100 on a steak or two? And so, I think moving forward, you're going to see a really strong cattle market. But how strong it gets is going to be entirely dependent upon what's going on with the consumer.
Outside markets this morning, guys. U.S. dollars off just a little bit. The stocks are getting beat up again, and they got beat up pretty good yesterday. S&P's down 43. Dow Jones down 350. Bonds are off almost a full handle. Crude's down $1.50 at 74.60. Brian Split, Matt Bennett, you guys watching, listening, you're going to hear a lot more from these guys on the channel here. Guys, thanks for joining me today.
Absolutely.
Thank you, Joe. Have a good Friday.
Looking forward to doing it again. Everyone have a wonderful weekend. We'll talk to you Monday.